Is a recession really coming in 2025? Will it crash the stock market? Will it wipe out your savings? Will your job be safe? These are the questions swirling around social media, news headlines, and even casual conversations at your local coffee shop. But before you panic or brush it off, let's dive deep into what's actually going on with the economy in 2025. And more importantly, what you can do about it. Let's get one thing straight. A recession isn't just a scary financial buzzword. Technically, a recession means 2 consecutive quarters of negative GDP growth. Basically, the economy shrinks for 6 months straight. But what does that look like in real life? People lose jobs. Businesses close or scale down. Investments lose value. Consumer confidence drops. Everyone tightens their wallets. Now here's the kicker. Recessions are normal. They've happened many times before and will happen again. The real question is, how deep will it be, and are you prepared? So what's fueling the 2025 recession rumors? Let's break it down. Inflation aftershock. Yes, inflation cooled off in late 2024, but the effects of high prices and interest rate hikes are still echoing through the economy. Interest rates remain high. The Federal Reserve kept rates elevated to fight inflation, but that also means borrowing is expensive for you, for businesses, for everyone. Layoffs in key sectors. Big tech, real estate, and even retail giants are trimming jobs. That's a signal. When companies cut costs, it usually means they're bracing for impact. Global uncertainty, with ongoing geopolitical tensions, trade disruptions, and unpredictable energy markets, the global economy is shaky, and that always trickles down. Here's the tricky part. Some economists argue that we're already in a mild recession, the kind that creeps in quietly with job markets softening and slower growth. Others say we're just in a slowdown, not a full-blown recession. So far in 2025, unemployment is rising slightly. Retail sales are declining. Housing markets are cooling. But GDP hasn't tanked yet. So, technically, not a confirmed recession, but we might be on the edge. This is the big one. Should you be worried? Not panicking, but yes, a little concern and preparation can go a long way. Here's who should be cautious. If you have unstable income or work in a volatile industry, if you're carrying high-interest debt, if your savings couldn't cover 3 to 6 months of expenses, but worry without action is wasted energy. Instead, let's talk about what you can do. Here's your 2025 recession-ready checklist. Emergency fund first. Aim to have at least 3 to 6 months of expenses saved. Start small if you must, but start now. Limit unnecessary debt. Avoid big purchases on credit. Pay down high-interest cards. Think lean and mean. Recession-proof your skills. Upskill, learn, adapt. Industries may shrink, but new roles always open in hard times. Invest smart, not scared. If you're investing, avoid panic selling. Focus on long-term, diversified assets. This might actually be a good time to buy low. Side hustle or backup plan. Whether it's freelancing, online selling, or consulting, extra income can be a lifesaver during uncertain times. History tells us one thing. Recessions are rough, but they pass. The 2008 crisis, the 2020 pandemic crash, they all felt like the end of the world. Until they weren't. Those who stayed informed, calm, and proactive, came out stronger. So the next time you hear, recession is coming, take a breath. Don't freeze, don't fear, prepare smartly, and you'll be just fine. If you found this breakdown helpful, hit that like button, subscribe, and share it with someone who needs a little financial clarity in 2025. Stay smart, stay secure, and remember, money works best when you work it wisely. Like, comment, ready for 2025.